One of the biggest questions buyers are asking right now is, should they wait for mortgage rates to drop before they buy a home? The honest answer is this: waiting may make sense for some people, but waiting only because you hope rates will drop could work against you. Okay, so now let's get into it. As I record this, the national average 30-year fixed-rate mortgage is around 6.66%. Rates can change daily and sometimes multiple times during the day, and no one can promise exactly when they will drop or how far they will fall. So instead of trying to predict the market, let's look at the three numbers that matter most. First, can you comfortably afford the payment today? Your payment includes more than principal and interest. We also need to review property taxes, homeowners insurance, mortgage insurance when required, and any homeowners association dues. This is especially important in El Paso because taxes can vary considerably from one neighborhood or property to another. Second, how much cash will you need? You may need money for your down payment, closing costs, earnest money, option money, inspection, and appraisal. Depending on the loan and the transaction, we may also be able to negotiate seller's assistance or using a down payment assistance program. And third, how long do you plan to keep the home? If you expect to stay for several years and the payment fits your budget, buying now may make more sense than putting your plans on hold for a rate that may or may not arrive. Here is something else to consider. If rates drop, more buyers may enter the market. That means more competition, fewer seller concessions, and possibly higher home prices. A lower rate does not automatically mean a better deal if you have to pay more for the house or compete against several offers. On the other hand, you should wait if the payment would stretch your budget, your job or income is uncertain, you do not have enough money set aside, or your credit needs work. Buying a home before you are financially ready is not a good strategy, regardless of the interest rate. There may also be ways to make today's payment more manageable. Depending on your situation, we can look at seller-paid closing costs, a temporary rate buy-down, down payment assistance, FHA, VA, conventional, or other loan options. And if you purchase now and rates improve later, refinancing may be an option. Refinancing is never guaranteed, so the loan still needs to make sense based on today's payment. My advice is simple. Do not buy because someone is pressuring you, but do not put your file on hold trying to time the perfect rate. Before you make an offer, send me the property address. I will help you review the estimated payment, cash to close, property taxes, and available loan options. Then you can make your decision based on real numbers, not headlines or guesses. Please like, share, and subscribe to our channel for more mortgage updates. I'm ReAnn Gonzalez with Edge Home Finance. I have been helping families with mortgages for more than 30 years, and I am licensed in Texas, New Mexico, and Florida.